Hi there, welcome back. You're still watching Market Fatafat on ET now. Thanks so much for staying tuned. Let's bring on board Foram M.Chheda, the founder of Chart Analytics, to take us through the technical stocks that she's flagging for us. But before we take it across to her, let me talk about another high flyer in today's trade, and that's Aster DM. Now, the company has posted a strong set of quarterly earnings for the second quarter. The hospital chain reported a net profit of 96.8 crore rupees, marking a significant turnaround from a net loss of almost 31 crores in the same time last year. So a loss has been converted into a profit on a year-on-year basis. Revenue has also grown by 16% year-on-year to 1,086 crores in quarter 2 compared to 934 crores this time last year. When you take a look at the operating performance, EBITDA has been reported at 2,033 crores compared to 157 crores, up 48%. Operating EBITDA margins have also expanded quite sharply, in fact 21.4% this time compared to 16.8% in the quarter 2 of the last year. Also, they have said that they plan to add over 1,800 additional beds by FY27, including the new Aster Women and Child facility in Hyderabad, which will feature 300 beds itself. So, very good numbers coming in. Also, a positive commentary coming in, going ahead from the management. And on the back of both of these reasons, the stock is doing pretty well, up almost 10% as we speak.
Alright then, that's about Aster DM. But Foram, very good afternoon and thank you so much for your time. Let's talk about the first stock, and that is MUS Count. Tell us how you're looking at this particular stock on the technical front, because a while back there were some hopes of recovery for this particular stock, but seems like with the market movement that's fizzled out a bit.
Hi, good afternoon and thank you for having me on the show. Well, to begin with, as you rightly made a mention that it was looking quite good, but now in the past few trading sessions, we've seen the stock also correcting. However, if we look at from the highs in the month of July, like 5,860, the stock price is corrected more than 30%. And now has been stabilizing near 3,860 levels. It's trying to take support. It's from the downtrend or the steep down move what we have seen in the past couple of months. Now the stock price has started moving in a sideward direction. So that is a good sign that the stock price is taking a pause from its fall. Secondly, when we talk about the stock which is already corrected more than 30%, from an investment perspective, it does look attractive. Talking about technically speaking, I would say the stock price has now started picking up some momentum. RSI is showing a positive divergence on a weekly chart. So I am considering the stock from an investment perspective. One can consider buying the stock 50% at a level closer to around 4,260. And if it comes and tests those levels of around 3,800, then one can look at adding the stock. However, the stop loss strictly should be maintained below the levels of 3,350 because that's a 200-day moving average, and one can look for a higher target of closer to 5,500, but clearly an investment call on this.
Bullish call coming in from Forum. That's a strategy for MUS Count stocks. But Gaurav, you've picked out SBI Life for us. It's an earnings candidate. Tell us what the numbers look like and why the stock is under so much pressure today.
Well, yes, when it comes to SBI Life's number, we have seen inline set of numbers. AP growth was at around 3% on a YY basis. VNB growth actually fell almost by 3%, but again in line with what the street was expecting. On the other hand, when we look at PNB margins, there we saw an increase of around 30 basis point on a sequential basis and around 160 basis point fall. Again, this was what the street was penciling in. In fact, when we look at the peers, it was actually better than what the peers have performed. But when it comes to guidance, we have seen a little bit of pessimistic guidance coming up from management. So what they have done is that they have actually reduced the AP growth guidance to around 15 to 17%. Now this was actually a cautious call from management that we saw for SBI Life. At the same time, when we look at VNB margin guidance, that has now come to around 26 to 27%. Although they have said that in the long term they will be achieving around 28% of the VNB margins, but again this is what street is picking up as a pessimistic view. Lastly, when it comes to VNB growth, that guidance has also been cut to 12 to 15% versus what it was at around 18% level. So when it comes to guidance, this is something that is weighing in on the stock. When we talk about the stock performance also, it is down 4.5%. So definitely watching out on what happens in SBI Life on the back of the weak guidance that has come from the management.
Alright, weak guidance coming in from the management weighing heavy on SBI. But Forum, the next stock is VIPO that you are tracking, because just after the earnings we have seen a move on the stock of VIPO, but as of now it's a bit on a silent mode. But how do you see that moving ahead?
Over on the stock of Wipro, if we talk about from the highs of around 579 in the month of July, the stock price corrected nearly 17% and formed a low of 480, that is within a month's time. After that, we have seen a very gradual up move in the stock. The stock started forming higher tops and higher bottoms. But overall, when we take out the entire technical pattern from those highs of around 579 levels to 480, it started forming more, or I would say it was foiling within a symmetrical triangle pattern technically. Currently, it is very close to those levels. After its results, it's tried to make a breakout, but we have seen an excellent increase in volume. And not only for that particular day, post that we have seen a gradual average increase in volume, which is adding on to the bullishness of the stock. Now, considering even the RSI like an indicator is very much neutral, doesn't indicate a negative divergence. So again, from an investment perspective and from a large cap perspective, this stock looks safe to invest and even buy. One can consider the levels of around 525 to 540 to buy the stock. Stop loss can be maintained below the levels of 517 and can look for a higher target of closer to 590.
The levels that Forum is spotting for Wipro, but going forward, what are the themes that are likely to lead gains? Let's listen into what Dinshaw Irani has on his radar.
Financial services will definitely be outperformer. I mean, the banking space itself, which has been a real laggard all these while. I mean, after COVID, I don't think the banking space has done much as such. I think that should see a pickup, especially after RBI starts infusing some liquidity into the system. I mean, obviously, the deposit raising will become easier. Obviously, there'll be a lot of demand from the consumers and stuff like that. So that's why that space, and plus, secondly, the wealth managers, the exchanges, I think these are exciting spaces to be in. So these may be the leaders of the pack going forward. Obviously, IT is another one that we are very keen on. I think that will be another leader going forward, because as things start improving, by the way, the call is that there's only going to be a soft landing in the US. If anything, it's going to be a steady pace that US is growing at. And the strength of the economy has been phenomenal as such. So I believe that IT should continue its mid-teen kind of growth going forward. So that's why we are very keen on that.
Alright, so that was Dinshaw Irani sharing his view on the IT space. Moving on, let's shift focus to what Colgate India is doing, because this was indeed an earnings candidate, and this time we have seen a jump of 10% on its top line, while the profit grew by 16% on a YOY basis, but it did miss the street estimates on that particular front. EBITDA did grow by 3.5%, 497 crores is what the company recorded, and the margins were also down on a YOY basis by 200 bits is the decline that what we have seen from Colgate coming in. Onto the commentary front, the management does say that the toothpaste achieved the high single-digit volume growth. The toothbrush continued to grow at a double-digit with rapid premiumization, but they expect continued difficult market conditions that are lining up for Colgate Palmolive, and even the stock price is reacting to the same. No major support coming in from the earnings, and even the commentary was not that cheering, and hence we are seeing around 3% cut coming in for this particular stock.
Right, the Colgate Palmolive management commentary is something that has not done well for the street. The street's not taking it well, but let's keep it going with FMCG companies and talk about HUL. Remember, the numbers came in yesterday post-market. It's been an inline set of numbers because we were indeed expecting a flat quarter, and that's what it has been for HUL this time around. But it's the volume growth miss that has ailed this stock today. Overall, it was a 2% underlying sales growth, a 3% underlying volume growth. However, what we were expecting was a volume growth of 5%, and that 3% mark is where volumes have come in at. It's a significant miss coming in, and on that note, the street is not reacting well to this stock. It's the biggest loser on the Nifty today. It's also weighing on the overall Nifty index. Almost 6.5% lower is where HUL is right now. Also, there is some uncertainty around the ice cream business separation that the company has announced that they will be going ahead and doing in December. And on the back of these numbers, we have a brokerage note from Investec coming in. They've maintained a hold rating but have hiked the target price to 2,837 from the 2,797 earlier. They say that the growth trends have been weaker than expected. The lack of margin expansion as well as no clear industry demand uptick drivers imply that volume growth will not exceed 4 to 5% in the near term for HUL. They also also believe 9% earnings CAGR and modest growth outlook does not warrant a relook at their current rating, and they're also expecting an improved revenue growth trend driven by pricing growth. But 4 to 5% is where they are penciling the long-term volume growth for HUL as well. So Street is not taking it well, and the stock is down and out today.
All right, that's about HUL. But moving on and sticking with the consumption space, and Gaurav, take us through what's happening with Avenue Supermarts and why the stock is in focus today.
Well, yes, when it comes to Avenue Supermart, now there is another note, pessimistic note, which is coming up from the brokerages. Now, Macquarie has downgraded their stock to underperform versus what it was at outperform. They have cut the target price to 3,700 versus what it was at 5,600 rupees. Now, what they're saying is that this downgrade is specifically because of the competitive concerns that Macquarie is seeing in the stock. When we look at the results also, management also said that there are some competition rising, and that is the reason that specifically the quick commerce is something which is a competitive space for management right now. And on back of this, what they're saying is that 350 basis point of a sequential fall when it comes to 2Q FY25 numbers in a same store sales growth was actually a negative surprise as per Macquarie in Avenue Supermart. They're also saying that the competitive concern is coming up from the quick commerce, which is going to sustain because the DMart's quick commerce segment is yet to pick up. And lastly, what they have done is that they have cut the same sales store growth, and at the same time they have also cut down the sales estimates for FY24 to FY40 almost by 200 basis point to come up to a new target price of 3,700 rupees, which is much below what the stock is doing right now. So definitely watching out on discounters on the back of the pessimistic note coming up from Macquarie.
Certainly, that's about this particular stock. But moving on to another stock then, and let's also talk about Ujjivan Small Finance Bank then, because this was too an earnings candidate. And what we have seen for this particular stock, as you can see on the stock price, the stock is actually down in trade today, and the numbers were not that great coming in for the company. If we see the earnings, then the interest income have seen a jump of 16%, while the NII saw a growth of 14% on a YY basis. But it's the PPOP that seemed to be down. But in terms of the asset quality, the GNPA numbers, there's been no improvement, but the NNPA has actually deteriorated because there's been a jump from 0.4% to 0.6% sequentially coming in for the NNPA numbers, and hence what we can see is the stock is reacting to that, down about 3.5% in trade right now.
Absolutely, Ujjivan Small Finance Bank also down and out 3.4%. But on that note, we'll slip into a very short break on this edition of Market Fatafat. Keep it going with all the stocks on the other side of this break. Hi there, welcome back. You're still watching Market Fatafat on ET now. Let's take it across to Gaurav. Gaurav, you've picked out Karnataka Bank for us. Tell us why the stock is in focus. It's an earnings candidate. Take us through what the earnings fine print looks like.
Well, yes. When it comes to Karnataka Bank number, we saw a weak set of numbers in Q2. What has happened is that the interest income has gone up almost by 10%, but interest cost has gone up almost by 16%. And as a result, we saw some fall in net interest income on a sequential basis. When it comes to pre-provisional operating profit, there also we saw a fall, and that was because of the higher cost to income. Now, company says that was a one-off event in this quarter, and it is likely to fall almost to 50% levels. But again, a fall in PPOP is what we saw in second quarter. Largely, when we talk about the provisions, that was actually in line, or rather it was improved for the bank in this quarter. We have seen decline in provision on a sequential basis as well as on a YY basis, and at the same time when we look at the credit cost, that has gone down to as low as 0.09%, which was actually the lowest for the bank. But as a result, we saw some kind of pressure in profitability as well because of the fall in PPOP. When we talk about advances and deposits, there we saw a growth of 13%, but what has happened is that the management have said that they are actually cutting down the growth guidance to around 15 to 18% versus what it was at 18 to 19% earlier, and that is something that is actually a pessimistic view coming up from the management in this quarter. Lastly, when we talk about ROE, there also we saw a little bit of dip. ROA has gone down almost below 1.2%, which was lower than the management's expectation, and that is the reason why we saw some kind of pressure in the stock. So definitely watching out on this counter, because management has said that they will come back, and for FY25 they will be having ROA of around 1.2%, but for now the stock is under pressure.
And that's about Karnataka Bank, but another stock that is flying high in today's trading session despite a weak set in Q2, and that is Vennel Florine, because the numbers were disappointing on all the parameters for Q2 when it comes to Vennel Florine, but it's the bright outlook for the specialty as well as the CDMO business that the management did share, and that helped get this particular rally in this particular stock. If we talk about Vennel Florine, there's been huge capex that is coming on stream across the segment, dedicated contracts and growing share of the late scale molecule as well as rising business with the global innovators are making the analyst bullish on this particular stock. On to the management guidance, they did guide and they are confident of a second half growth in the specialty segment on the back of strong order assurance as well as beyond FY26 as well. They do see the orders coming in. The company is positive on the growth of the CTMO business as well, and they also highlight that the inquiries are now seen to be increasing when it comes to the business demand outlook. So on the back of good and a positive commentary, Vennel Florine is holding on to the gains of close to 3%.
Okay, so that's a stock that's doing well for itself in today's trade. But Foram, you've picked out SBI on the charts for us. When I take a look at these charts, year to date, it's been a 25% growth. 1 year also up 43%. It's been a mover. It's moving steadily, but it's moving nonetheless. Tell us what's the outlook on the charts when it comes to SBI.
Well, SBI in the beginning of the year was facing a lot of resistance near 776 to around 780 levels. And in the month of April, it took off those levels and went up higher to around 912. Post that, we have seen a gradual decline in the stock, and the stock price again moved back to these levels, which was initially resistance, is now acting like a support at around 765 to around 780 levels, coinciding with the 200-day moving average. So there are multiple things, like one is the trendline support, along with that is the 200-day moving average, which is acting like a good support for the stock in this zone of around 760 to 780. Thus, overall, the stock does look that it is stabilizing. And since it's corrected almost 16% from its highs of 912, we can see now the stock price moving in a sideward direction, which is also indicating a positive divergence on RSI. Thus, from an investment perspective, it does look pretty good levels to enter in. A strict stop loss is advisable at around 760, considering the volatility, and potential upside target can be closer to a level of around 830.
Okay, well, so that's the view coming in on SBI from Foram. But on that note, Foram, we'll have to let you go. Thank you so much for taking the time out, joining us and sharing your technical picks and your perspective with us. But well, the ultimate pickleball showdown has begun as the PWR DUPR India Masters is underway in New Delhi. Let's tune into some live action from the event.
6-3.
Going down the line there, Sophia Seving. She's really having a good feel of the ball here. She's getting that rhythm going.
Side out. Put 36.
Wow, the overhead, that smash. We've seen a few going all the way, but this one just so good from
6-3.
Sophia. See how she takes her time, comes in and smashes that one. So we look at the next point here. Solid shot there by Sophia. She's really trying her best to come back strong in this game. Well, look, also, I don't know if it's just me, but I think in terms of athleticism, these two athletes have shown a lot more range in the first few games. Even in the warm-up, you could tell that by the way they were moving. As you can see again, precision personified. A 5-point lead now for Sophia Seving. That speaks volumes about how good this start has been for her. And she's looking so relaxed and comfortable. And you've seen that. From the body language, you can tell she's in control. She knows what can be expected of Amelia Schmidt. So taking her time and really controlling proceedings here on championship court so far.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.